Welcome to the Tax Affix podcast. I'm your host, AB Safari, and this is episode 1. In studio, we've got a highly skilled accountant by the name Sylvia Kingori, who has vast experience in cost accounting, financial management, and tax administration. Sylvia Kingori, welcome to the studio.
Thank you so much, Safari.
Tell us about yourself.
Okay, as you've said, my name is CPA Sylvia Kingori.
Okay.
I am an accountant, actually the lead accountant at Tax Affix Limited.
Mm-hmm.
We are a bookkeeping, accounting, and tax consultancy firm based in Mombasa.
Mm-hmm.
Okay.
Okay, and what? Tell us more about Tax Affix.
Okay.
Mm-hmm.
So Tax Affix is a firm that helps businesses, especially SMEs, to maneuver through this complex tax landscape. We also help businesses when it comes to matters cash flow, matters operation, and also bookkeeping and also compliance.
Okay.
We work with business people looking at their major, pains in businesses and find a way to solve them and find a way to improve efficiency in their businesses and also to make them profitable.
Okay, so that brings us now into the essence of this episode, which are the 5 terms that one should know as a business person. The 5 terms are capital, cash flow, bookkeeping, break-even point, and compliance. So I think we can start with capital. What is capital?
Okay, Safari. So capital. Any business person or any aspiring business person always has that term
capital
on their lips. Yes, capital. Yeah. And mostly the aspiring business people, you'll hear them say, I need capital to start. I just need capital. So what exactly is capital? So capital basically is that amount, the initial amount you need to start a business. Most of the time, it's not just money. We have capital in form of cash. We have capital in form of labor. Okay. That's human power.
Okay.
We also have capital in terms of, let's say, assets, machinery, land, depending on the business you want to start.
Okay.
So for SMEs mostly, it's the money.
The money.
Okay. Depending on the business you want to start. You want to start maybe a hardware store. You need to stock.
Yeah, you need to stock the...
You need a shop. And, the landlord is telling you, you have to pay 6 months in advance. The shop is, let's say, 40,000 a month.
40,000.
So you need 6 months rent, let's say, in terms of deposit. That is part of capital. Okay?
Yeah.
You need to stock, you need inventory. You need to set up a shop. So sometimes business people and aspiring business people will just look at the inventory.
The inventory.
Maybe just you have 50K, let's say 500,000 depending on your business, and you can go get inventory of 500,000 as to start your business. But then you forget about other costs.
True.
That are associated with starting the business.
Okay. So,
and all these will form your capital.
Okay. So there was also a question on types of capital. There was starting capital and working capital. The people need to know the exact difference between these two.
Okay. That's a good question. Okay, for starting capital, it's what I've just explained. The money you need to start with. Okay. And then we have working capital.
Working capital.
Working capital is the money you need to sustain your business. This is business that is asking for you to pay some expenses, let's say utilities, let's say salaries, the day-to-day running of the business, expenses required for the day-to-day running of the business or monthly. Now, the money you will have, the money that is required for you to run that day-to-day activities of the business is what we call working capital.
Okay.
Yeah.
And there's also another pressing question. In this episode, we're going to have a number of pressing questions. So there's a question of when it comes to capital, raising capital, should I go get a loan or should I save up for my business?
Okay, that is a very, very common question. We get it a lot from aspiring business people. And a personal opinion. I'll start by saying all business people, they're actually very smart.
Very smart.
And they actually know what they're doing. So, but the challenge is getting the capital. And what I'd say, in my personal opinion, is when you're starting, if you have a way of raising capital that will not demand you to pay it in, fixed installments. Because if you get a loan, the next month, whether you've opened the business, whether you've got an inventory, whether you've started running the business, you need to pay at the first installment. So if you're starting the business, I would really discourage getting a loan to start the business.
Okay.
Maybe if you're able to save up, if you're able to get capital from people who will not demand that you start paying installment the next month, good for you.
Okay.
But at what point maybe in your business can you consider debt? Maybe when you've started, you've gauged your business, you know how money is flowing in and out of your business. Are you profitable? And you want to expand now. That is when I would encourage you to borrow.
To borrow.
And expand your business. But not when you're starting.
Not you're starting. That's noted. I'm also taking notes, by the way. So when it comes to now the issue of capital as well, how do I use it wisely? So that can prevent maybe the capital decreasing or maybe wastage.
Yeah. Okay. So maybe how do you grow?
Yeah. How do I grow it exactly?
Your capital
That's the word.
In your business.
Yeah.
Okay. So the biggest, I would say, first of all, is through efficiency.
Efficiency.
Yeah. In running of your business, because you want to retain as much capital as you can. If you started with 500,000, day one, you're already minus 400. You're already minus. You see, because now you're getting inventory, you're getting what and not what not. But efficiency is what will enable you retain as much capital as you can, and also plowing back of your profits. If you do the business, you're getting some money, you're getting some extra cash, you can plow it back in terms of either stock, in terms of either marketing. Yes. So make sure you retain as much money as you can in your business.
Yeah. You've heard the word, guys. Retain as much as possible.
Yeah.
Thank you. So as we move on to the next session, it comes to the break-even point. I've started my business. How do I reach the break-even point? And even what is this break-even point? What is it?
Okay. So break-even point is the point at which the business is able to fund its expenses. So you've not made any money from the business. At that point, our incomes is equals expenses. So income minus expenses will be zero.
Zero.
Yes. So you've broken even. Okay. So it's different for many businesses. It's a very unique per each business, because some business, they sell, let's say, a product. So a business person will ask you, how many products or how many items do I need to sell to break even? You see? Some, they sell a variety of products. Okay, with different costs, different selling prices. So you cannot tell someone that you need to sell 300 items per month to break even. Okay, so we usually have a type of a formula in which we can compute break even, especially for people in manufacturing, or if you're dealing with one product or fewer products in bulk, it's very easy. And if you're also selling in, like, we can look at your revenues in terms of per item, we can be able to compute your break-even point in terms of units.
Units, okay. Mm-hmm.
And this break-even point always looks at, okay, when you're looking at the break-even point conversation, there are two expenses you need to keep in mind. So there are fixed expenses.
Let me write that down. Hey.
You're going to use this for your business. Eh?
Kabisa.
So fixed costs. So these fixed costs are the costs or expenses you'll need to pay whether you make sales or you don't make sales. Good example, rent. Salaries. Whether you sell in that month, whether you don't make any sales,
you have to.
The landlord expects that you pay rent. Okay?
Yeah.
And the other expense you need to take into consideration when you're looking at a break-even point is variable costs. So this is cost that increases with sales. Okay? And mostly this is cost of goods.
Okay.
Cost of goods. And there are other variable costs that are not cost of, but at the end of the day, they are all cost of goods. Because if you sell 10 t-shirts, it means you incurred cost in terms of maybe material and whatnot for 10 t-shirts.
Yeah.
Okay. So that's variable. And then we have a whole formula for computing.
Hey, formulas, guys. Please take your notebooks. Note down these formulas.
They want to talk about the formula here, really. But mostly it's about having the fixed cost and dividing that with, let's say, the selling price minus the variable cost. Okay.
Thank you.
Then you will know that once the month starts, if I sell 30 items, let's say, I've already broken even.
Yeah.
And anything else I sell after that will form profits.
So after reaching the break-even point, we want now to advance into a stage of making now real profit. We want now to grow the business to the place of making profit now. How do we take our business from the breaking point to now realizing the profits now?
Okay. So you've started your business. You're doing the sales.
Exactly.
You're at break-even point.
Yeah.
So from there, now you start making some profits.
Some profits, yeah.
So your question is, how do you move from that to you grow that profits?
Yeah.
Okay. Number one, I'll talk about sales.
Sales, okay.
Any business is run through by sales. Okay. Sales. That is why most people in sales, they're always complaining about the pressure.
The pressure of sales.
Pressure. To sales. You need to push sales. Because, let me give you an example. If we break even at 300 units, and this month you've sold 300 units, it means we've not made any money for ourselves.
We've not advanced into the honey.
Yeah. But if our break-even point is 300 and we are pushing the salespeople, and the sales go high, maybe they go up to 1,000 units for the month, it means the 700 units were making us some profit.
Some profit, yeah.
So the other thing I'll talk about is your expenses. Maybe having some lean production or lean operations. By lean, we say just enough. You see, not any more or any less, just enough to make this production efficient. Okay. So that means you're not having expenses that you do not need. Remember, in our competition for break-even point, we are looking at the costs. And this is what is determining our break-even point. I'll give you an example. If my rent is, let's say, 20,000, and I'm selling my products at 1,000 bob, I just need to sell how many to get to rent? Let's say rent need 20,000. My products are at 1,000 bob. I need to sell 20 products.
20
to cover rent.
Yeah.
But if my rent is 10,000,
You just sell 10.
Just 10. So if your cost goes down, if you reduce your cost, your break-even point also comes down. And that means your profits will increase. So these are small things in a business operation that can push you to profits, especially for an SME. And as I have said, they are very unique. Each business has very unique needs and a very unique kind of operation.
Okay.
Yeah.
There's a type of question here. I call it the doom question. It goes like this. It says, what happens if my sales stay below the break-even point?
Your sales are below the break-even point. It means you're actually not making.
I close down.
Yeah, either you'll close down or because you won't close down, your business is running. It means you're funding it from your pocket as the business person.
Wow.
And the whole essence of starting a business is making money. So are you making money for your business? Should you be making money for your business? The business making money for you?
That's the question.
Yeah.
Audience, please answer that question. So we're heading on to the next section, which is cash flow. It's a very important term, cash flow. What is cash flow?
Cash flow is the whole heartbeat.
The whole heartbeat
of a business.
Underline the word heartbeat.
Yes. Basically, cash flow is money, is the flow of money in and out of your business. Okay? So money comes in, money goes out. Money comes in, money goes out. And I would like to tell you this, that you can have a business that is making profits, but with negative. Okay, sorry. There are two types of cash flows in a business.
Two types. Let me put it down.
There's a positive cash flow and a negative cash flow. So positive cash flow, it means your ins are more than your outs. Okay? You have a positive cash flow.
Positive cash flow.
But if your ins are less than your outs, you have a negative cash flow. A business can have sales, but negative cash flow. And that's like a bullet to the head. It will quickly die. As compared to a business with positive cash flow that is making losses.
That's a real jam of information up. Kabisa.
Yeah.
So what are the main things that take out money from my business?
Okay. The main things that will take money out of your business are still the basic things that still run your business. You have, number one, the most notorious ones, but you can't run without suppliers. Suppliers, they supply you with inventory stock, services. So these are people who demand to be paid. Those are number one. Some of the things that will take money from your business. The worst of them all is the directors. And the owners. They draw money. They take money from the business. They pay school fees with business money.
Then they fail to return the money.
They forget. And you have the employees through salaries and whatnot. Just the operation, the running of the business needs money. Okay. We have any other expense you're incurring in your business needs to be paid. So the rents, whatnot. Yeah.
All right. So there's what habit can make maybe business people have healthy cash flow in the business?
Okay. Cash flow actually is a very crucial aspect in a business. And there's something we call cash flow management. And again, I would like to say it's very unique per business. But there are several maybe things that a business needs to do to make sure that they remain in positive cash flow. The first one is number one, focus on the in.
Focus on the ins.
The ins should be more than
the outs.
The outs. So the ins, number one, is it a sales issue? So you need to sell more. You need to bring more money. Okay. Number two, is it a data issue? Debtors are people who owe you money.
Yeah.
Who owe your business money. People you've supplied to. So push to collect as soon as you can.
As soon as you can.
Okay. For you to have a positive cash flow, your debtors should not age more than 60 days.
Very important piece of information.
More than 60 days. That is.
That's too much.
Yes. You will struggle as a business, especially if you are in a cash intensive business. So push, collect from debtors as soon as you can. We also have is it an inventory issue? Are you holding your cash in inventory? Sometimes you need to, actually not sometimes, all the times you need to evaluate your inventory. You need to know what's moving, what is not moving, what is holding up my cash.
My cash.
Okay. Yeah. And then now you've focused on your ins. Now you're outs. You need to evaluate your outs. What are we spending a lot of money on? Which expense? Is there anything we can do about it?
Yeah.
Okay. Number two, creditors. Negotiate for terms. You don't have to pay your creditors immediately they supply. Negotiate for terms. Tell your creditor, please give me 30 days.
Give me 30 days.
And then I'll pay you. Give me 60 days. And in the same tongue, I'll tell you, ask your creditors for as long, the longest period they can give you. But the debtors, please, 60
the shortest.
days. Yes.
Yeah.
That's the only time. Yes.
60 days is the deadline.
Yes, please.
Yeah.
For the debtors. But maintain at 30, aim at 30, aim at cash at supply, then 30 days, and then 60 days. Okay. But for the suppliers, ask them for like 180 days.
180 days.
They won't give you, but you can ask.
You can ask for things. Yeah. All right. There's also another section of bookkeeping.
Before you go to bookkeeping, I'd like to close the conversation on cash flow. There's this very famous term that goes like revenue is vanity.
Revenue is vanity.
Yes. Profit is sanity.
Profit is sanity.
But cash is reality.
Cash is reality.
Or king.
Cash is king.
Yeah. So what does that saying mean? You can sell. Okay? You look at the revenues, the sales you've made, let's say, running to 15 million. So it's vanity, I'm telling you. It doesn't show anything.
It doesn't show anything.
It does not show how your business is performing. But then we have something called profit. This is after the, revenue is like this, and then you get the expenses, profit is like this. So that one shows you at least how much you've made per year or per period.
Yeah.
But cash flow is king. Yeah. Any business should be able to meet its recurring costs and its current expenses without stress.
Without stresses.
Yes.
Exactly. When it comes to the aspect of bookkeeping, there was this one question. It says, what are the various methods or apps I can use to keep my daily business records?
Okay. What I'd say, or I tell businesses, is to find a way to just record. So some businesses do it manually, which I can say is better than nothing. So they record their sales, they use their cash sale books, they use petty cash vouchers, which are also very important because of supporting documentation. But nowadays we have various softwares for bookkeeping, accounting softwares. Of course, also depending with the business you're running, some softwares are not a one-size-fits-all kind of softwares, depending also with the business needs. But we have the most common ones, and like QuickBooks. I'm sure most people have heard of it.
Yeah, QuickBooks, okay.
QuickBooks is a very simple accounting software. We have other softwares, online softwares, like Zohobooks. We have Odoo. Depending on the business, okay? There are some businesses that are very particular when it comes to operations, and most, they prefer having a software designed to their own
specifications.
Needs, and specifications. So they are out there. You just need to pick one that maybe suits your needs best. And from there, especially the online or the cloud accounting systems, I can recommend those ones because you see now, you have your records. You can access them from anywhere using your devices. Okay. Yeah, so those are some of the softwares that a business can incorporate into the business.
Okay. That's nice. And what about the importance of separating personal funds from business funds?
Okay.
It comes from the statement, my business money is not your money.
Yeah. So it's very important for any business person or aspiring business person to keep business money separate from your money. How can you do this? That's a question that comes up. And we always recommend or advise that you pay yourself a salary as a business person. Depending on how your business is performing, you can decide to pay yourself a monthly salary. So this salary now will cater for these expenses that you need, that are pushing you to get money from the business. Remember, this is the money you input into the business when you were starting the business as capital. So if you start drawing, especially if it's not controlled, if it's not recorded, you'll find yourself at some point with some cash flow issues, because now these funds are going out. They're not contributing directly to generating sales or something like that.
Okay. Okay. Now we move on to our fifth aspect now, which is, I can argue, can be maybe the most important. It's compliance. What is compliance?
Compliance is basically running a business that follows the law. Okay. A business that is within the law of the land.
The law of the land.
So, and there are so many, I'm telling you, there are so many. One time you think you're very compliant, then there's another body asking you for where is this and this and this.
And you find yourself on the other side of the law.
Exactly. Did you know you have to display your certificate of registration at your business premise?
I did not know. I did not know that.
You did not know. That is according to the OSHO people. They'll come and ask you, where is your certificate of registration? It should be displayed somewhere that is visible. Okay. So there is compliance when it comes to taxes. KRA, there are laws that guide that, of course. And you also need to be compliant with the business. There are so many, depending on the type of business you're doing and where you're operating. Yes.
And when it comes to documentation, I've heard you've mentioned something about documentation. What is the essential or correct business permits needed for business to run here in Kenya?
In Kenya. Okay. I would say it also depends with the business you're running. But the first one, you need first to have registered your business.
Registration.
Yes. Your business needs to exist in some form. You can register it as a sole proprietorship, either as a company, a limited company. We have businesses that are registered as partnerships. Could be limited liability or not. We have some other organizations, maybe when people come together.
Such as maybe CBOs?
Yes, exactly. Community-based organizations. These ones, you'll find them especially in the non-profit making sector. And also We've seen it also in the mining sector. CBOs are very common.
Very common.
Yes. So it depends on how the business is structured. Are you alone, running the business alone? You can have a sole proprietorship. You can also have a company with you as the sole director and shareholder. Are you two people who've come together and decided to form a partnership? Especially professionals, accountants, lawyers, mostly they form those LLPs, okay, limited liability partnerships. So that is the first thing. So once you're registered, you have your certificate of registration and other documents that are very crucial to anyone who is interested in your business. The taxman, the bank. Okay, you'll be required. You cannot open a bank account for a business that does not exist on paper. Okay, and you register this through the BRS.
Okay.
And then let's come down to on local level. You're having the county.
The county license.
Yes, the county licenses. You need also that to operate your business. You need to, and you see they're different depending again with the business you're doing. And size of your business, which also you need to display on your business premise.
On the business premise.
Okay. So that's again, when it comes to regulate the business that are regulated, you need the license. Okay. For example, let's say like the digital lending businesses, they need to be licensed by CBK. Okay. So if you don't have the license, you should not be operating. Let's come to, let's say like lawyers. If you don't, you need there's a license you need. Okay. Actually, nowadays, when you're registering your business, they will ask you to provide documentation that allows you to be running that business. Okay. So that comes to the specialized type of businesses. So you will need this to be able to run your business. Okay. Yes.
And so what does it mean for my business to be compliant?
So basically for your business to be compliant, it means now it's running, ensuring that it's following the laws. I'll talk about tax compliance mostly. What does it mean for your business to be tax compliant? So number one, your business needs to have a KRP. If it's a company, it needs to have its own KRP. Even if it's a sole proprietorship, it uses your own KRP as you as the owner of the business.
So that's very essential.
Very essential. That's a crucial document in the tax world. Number two, I know you've heard about the buzz around ITIMS.
Yeah, I've heard a buzz around it.
Yes. So number one, you have to be ITIMS compliant. What does it mean to be ITIMS compliant? It means that you need to generate invoices that are ITIMS compliant. By that, it means they are generated through the ITIMS system. This is an invoicing system by KRA. So we had another system before, which was called TIMS, which are ATR machines that are TIMS compliant, which is still operational. And we have the ITIMS now that came. It's a newer technology after the TIMS. It's either online. There are ATR machines that are ITIMS compliant, and also in the bid to get to the to everyone, we even have a USSD code for ITIMS, which you can be able to generate an invoice which is ITIMS compliant. Also on eCitizen, you can be able to generate an invoice that is ITIMS compliant. This is very crucial because in this and where we are heading, and in today's business world, thanks to technology advancement, you cannot be able to, sometimes I usually say the customer is the one that is pushing the supplier to compliance.
Okay.
Because you as a customer, you need to demand from your supplier to give you an ITIMS invoice, because that's the only way this expense will be deemed valid.
Okay.
And That's the only way it will be deemed tax allowable. Because when you're computing profits, you need to have your sales, then you deduct expenses. But these expenses, can you support them? For you to be able to support them, you need to have ATMs invoices for them.
Yeah.
Okay. So that is also very crucial when it comes to compliance. And now, okay, before I go there, the third point was about now your tax obligation.
Yeah.
As a business,
what taxes am I supposed to pay?
What taxes are you supposed to pay?
Yeah.
So it also depends. With the business you're running. But I say we have three major branches or types of taxes.
Okay.
We have income tax.
Income tax.
We have VAT.
VAT.
And excise
duty.
Yes. So all other taxes, the TOTs, the rental income tax, whatnot, they fall under income tax.
Under income tax. Okay.
Yeah. So, and it's called income tax because it is directly related to your type of income. When I say monthly rental income tax, it means you have rental income. Okay. If, we have turnover tax.
Turnover tax.
That is tax on your turnover, which right now is at 1.5%. Okay.
Yeah.
So, as a business person, you need to know what taxes you need to pay. Do you have employees? If you have employees, it means you need to pay as you earn.
Pay as you earn.
Yeah, which you deduct from their salaries. Okay.
Yeah.
If you have turnovers over 5 million, it means you need to be paying VAT. Okay. You need a VAT obligation. You need to be paying VAT. Okay. If you're dealing with accessible goods, you need to be paying excise duty. So it is very unique to a business, depending on which business you're doing and the structures, if you have employees and things like those. So that is how you know which taxes you need to be paying. I think the question should be which taxes, what's best for my business?
Yeah, what's best for my business? Yeah.
Yes.
All right. Thank you so much. The episode has been very comprehensive. I personally have learned a lot. Hope the audiences have learned a lot as well. So, any parting shots?
Okay. As we end this, I'd like to say running a business is hard enough.
It's hard enough.
Yeah. Compliance doesn't have to be. Okay. So we at TaxAffix, we aim at informing the business people. Okay. When it comes to taxes or just operations, what to keep an eye on in their businesses. We also aim to ensure that their businesses are always prepared. Okay. We say you plan for order, but you prepare for chaos.
For chaos. You plan for order, prepare for chaos.
You prepare for chaos. Yeah. So these, especially the tax landscape, it keeps changing. Each financial year, we have some changes via the finance bill. We want to ensure you as a business person, you're not left behind. Okay. We are moving with you. You're not being left behind. Okay. And if I would leave my viewers with just one more tip.
One more tip.
Maybe when it comes to operations is do not let anyone interfere with your cash flow. For business survival, cash flow is everything when it comes to a business. So with that, thank you so much for having me today.
Thank you so much, guys. This has been episode 1 of TaxAffix podcast. Hope you guys have enjoyed. Make sure to like, share, and subscribe. And we look forward to engaging with you in the comment section. It's only the beginning, guys. Take care. See you in the next episode. Thank you.